Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 3 p.m. Eastern Time. We got about 53 minutes left to go in the trading day, and on CPI Tuesday, the market's giving it up a bit, and we're right at the lows you were at about 10:30 this morning. We'll jump into some of the volume. Right now, you got S&Ps down by about 1/3%. We're trading at 69.90. NASDAQ 100 off a similar 0.4%, 25,859. The Dow off 0.8%. JP Morgan trading lower. Banks kicking off earnings, and the Russell in the green by 2 points. Let's jump over to JP Morgan, actually. How about this one? Okay, down 4.1% right now. AXP was American Express. Not as bad. Okay, we jumped around to some of those credit card companies, slightly in the red, but we'll get into JP Morgan earnings. Jump over to Goldman, off 1.25%. Morgan Stanley, off 2.2%. The bank's kicking off earnings, and not in a good way. Quite a reaction to those JP Morgan numbers. You see the escalation, and we are at session lows right now. It's been a negative action day for JP Morgan, off by 4.1%. And we get down to yields. So Fed in focus. There's your 8:30 volatility. Inflation comes in under estimates. Now, some of the reason why you're coming in under estimates is because of a lack of data during the government shutdown. You're comparing some of the data to prior data you don't have, so they're just carrying forward the same numbers, showing 0% growth or price appreciation in some of those. But here's the thing. Where that's happening the most, okay, and let's jump over to the headline. We got core CPI rising 2%. Economists expect inflation to ease gradually, okay? Now, where this came in, where did I just have it? I was down a bit. Forgive me. But one of the things that's happening here is housing, of course, okay? And I talked about it this morning. Housing is a huge component of CPI, not as big of a component of PCE. Nonetheless, we get a light inflation number, and the market says we're trading to higher price, lower yield on the 10-year. We're at about 4.17. Now, all things considered, we've just been chopping around for about the last month, right where we are right now, sitting at 4.17% of the 10-year. The dollar right now, just under 100, 99.12. Quite a little bounce from the lows of December. When we were hitting 97.74, we're now above 99. And yeah, let's jump back to that CPI number. So headline numbers, okay, we're talking about headline, 0.3% for the month and 2.7% for the year. On a core basis, 0.2% for the month and 2.6%. Shelter prices advanced 0.4% in December, the most since August. If you exclude shelter, the core CPI only climbed 0.1%. Key housing metrics, including primary rents and owner's equivalent rent, rose at a firm pace even after the changes recorded from September to November were surprisingly small. But one of the things happening here is the government shutdown. You had a decline in appliances as well. That one. Here we go. Economists said that the data was artificially depressed by the record-long government shutdown because the BLS could not collect prices in October and assume no increases in key housing metrics. November data were also collected later than usual and could have been affected by the holiday season. So there's still a little bit of cloudy nature in some of that data. But either way, it's a light number, man. You march forward to a Fed. Now, we get a Fed 15 days from right now, all right? You jump to the Fed futures, and you're talking about, as of right now, 97% chance they're doing nothing, folks, okay? That's what the market's pricing in for their January 28th meeting. 97% chance that they're going to stay where they are right now, 3.5 to 3.75%. You jump to March, they're still there. Almost a 3-to-1 chance that they're not moving. You go to April, Powell's final meeting, market still thinks 60% chance are there. Things get interesting in June. That's when you get the first cut priced in, 48% chance, and that'll be under a new Fed chair. New Fed chair takes over in May, and their first meeting will be in June, and they will have 5 meetings throughout the year. Yeah, we'll talk the credit cards in a moment. Talk to CPI. Yeah, and the inflation numbers. So let's talk about the credit cards. They say everything's on the table. I mean, amazing these banks have to come out with the earnings right now, right? Now, JP Morgan, they were one of the ones hit yesterday when the call for the 10% cap threatens to significantly change its business and would harm the bank and customers. Be very bad for consumers and the economy. That's the CFO saying, okay? And of course it would significantly change. I mean, I talked about it yesterday. Way too much uncertainty about the proposal. It's always in the details. But it's just not feasible. When you think about, if you're going to loan money at 10%, why would you ever loan money on a credit card at 10% when you can loan money in a much more secured fashion at 7 to 8%, right? Mortgages, they're handing out. In terms of securing that level versus credit card debt, sometimes that just goes bye-bye. Credit cards, $247.8 billion. Talk about a loan shark, man. $250 billion. JP Morgan in the credit card business, man. Wow. $7.28 billion in 90 days on those credit cards. Oh, man. 5% increase in the bank's credit card services and auto businesses in the last 3 months of the year. That is quite a number. And that business would dry up sharply. And it's one thing if the government's going to subsidize those at some point, but if they're not going to be subsidized and they can only charge 10%, they're just not going to offer that type of a service, period. But yeah, they got more going on. We'll get into JP Morgan numbers later in the program. But how about making almost $100 billion in net interest income for a fiscal year? Whoo! But guess what? It's time to come into these valuations. You check out these banks. It's been a heck of a run, man. Okay. JP Morgan, April lows, 200 to 337. We take a look at the volume on this equity on a weekly basis. Let's jump this off here. Yeah, the holiday week should drift a little higher. Volume's decent. You had some nice volume that week of December 8th. That's where we're at right now. 63 million shares. JP Morgan down by 4% right now. S&P's off by 29. All right, folks, stay tuned. We're coming back with our man Basil Chapman. Don't go away.